Hi everyone and welcome to the Newsagent podcast. I'm Susie Lysett, Senior Content Executive at Goodlord, and this episode is a recording of our Making Tax Digital webinar with Robert Bolwell, Senior Partner at Dutton Gregory, and our CEO, William Reeve. They talk through just how your agency can prepare for what's changing under the Making Tax Digital initiative, which is a key part of the government's plans to make it easier for both individuals and businesses to manage their tax obligations. There are obviously plenty of ways that you can help your landlords prepare, as well as making sure that your agency is compliant too. And Robert and William share some expert recommendations in the course of their conversation. So that's the overview. Let's get into the detail of what it all means and crack on with the podcast.
Morning and welcome. Welcome to the Goodlord's webinar on Making Tax Digital, and welcome from me, William Reeve, and from Robert Bolwell. I'll introduce Robert in just a second, but just before I do that, let me say a few words about Goodlord. Goodlord is a software platform for progressing lettings deals, and we think we're the best way to do that. For any letting agent, we offer a whole range of features and services, starting with setting up the landlord terms of business, to creating the contract, doing tenant referencing, managing utilities, e-signing, payments, the whole soup to nuts experience. And we've got several thousand letting agents across the country using us, and are hard at work helping agents stay compliant and keep in touch with all the changing regulations, which is where today's webinar comes in. We're very fortunate to have Robert join us. Robert, love it if you could introduce yourself.
Hello, good morning, William. Good morning, everybody. My name is Robert Bolwell. I'm the senior partner of Dutton Gregory. We're a firm of solicitors with a team that very much specialises in landlord and tenant type issues, from literally serving notices to running court cases to defending landlords who, for whatever reason, might fall foul of the regulatory authorities. But anyway, that's me. Yes, William, today I think we want to talk about the whys, the whens, and the whats of making tax digital, which has been on the agenda now for a few years.
So what have we got on the agenda today? We're going to start with an overview of the new regulations, which are kicking in earnest in 2024. We're going to talk about how those regulations on digital tax could impact agencies. We're going to talk about how they impact landlords, and we're going to talk about the use of the software that's going to be required here. But let's start with what these regulations are all about. Robert, I think it's sort of started with VAT, didn't it?
Yeah, it's all with VAT. In fact, it goes all the way back to the budget in 2015, when the government said it wanted to make all tax digital. Now, if you think about it, we've had income tax in the UK since the Napoleonic Wars, but until this last 5 or 6 years, we've always filled in our tax returns, usually on a bit of paper with a quill pen, whatever. All that is now going. What the government has done by degrees since 2016, when the consultation period ended, is they've started digitalising all the tax. Now, in simple terms, that means that all of our records have got to be kept digitally. You can keep analog records if you want to, but ultimately they've got to be kept in a digital format. And when you submit your returns to the revenue, whether it's for VAT, income tax, whatever it may be, you've got to put in a digital return, which necessarily means that your software has got to be compatible with the software that the revenue actually uses. But that's the basics behind it. Now, I know we're talking about getting you guys ready for the big changes in 2024, and that's what we're focusing on today. But I guess the good news is that if you work for an agency that's already VAT registered, because the way the regulations had developed over the last few years, you're probably halfway there to being ready for 2024. You see, if you had a business where you were registered with VAT and your gross VAT was over 85,000 a year, well, then you had to start using a digital system way back in 2019. They extended that system in April of 2020, and then now we have got to make sure that if you're filing any VAT return from the 1st of November, as the slide suggests, yeah, that's got to be a digital return. So if you're already doing that from your accounts team, it means your accounts team have software in place, which by definition must be compatible to what the revenue are using. So in many ways, you're already halfway there to getting yourselves prepared for the big change in 2024. Now,
so what
as it says on the screen, sorry.
Yeah, so the big change in 2024, let's, again, it's the website from the HMRC, except it's on the screen, but let's just talk through that.
Okay, so from April of 2024, if you are a business owner or if you're a landlord, and as a landlord, you have an estimated income from your property portfolio of 10K a year or more, then you're going to have to start filing digital returns. Now, at the moment, if I put in my tax return, I do it once a year, I'll get it in by the end of January, and that refers to all the income I earned in the previous tax year. So there's a bit of a lag between one tax year ending and me putting in my bit of paper, my current tax return. Now, if I'm a landlord in 2024, all that goes out the window. You'll still have to do your annual return at the end of the year, like we do at the moment. But what the government is saying is from 6th of April 24, a landlord who's got a rent roll of 10K a year or more has got to file a quarterly return. A bit like, William, you and I put in a VAT return for our business every quarter. The landlord's going to do that. Now, at the moment, when William and I put in our VAT return, normally we have to make a payment to the revenue. That won't apply to landlords from April 2024. They'll still put in their annual return at the end of the year. But before we get there, they've got to file a return every single quarter, indicating what their rental income is for that quarter and what their expenses are for that quarter. So that's 4 extra filings a landlord's going to have to make from 6th of April 2024. There's then going to be a 5th filing, which draws all the information from the first 4 into one place, and then you put in your normal tax return. So in terms of work
and
for a landlord...
Interrupt you a second, Robert. Sorry, that 5th filing is the end of period statement. Is that right?
Absolutely, absolutely. So there's going to be a lot more a landlord's going to have to do from the 6th of April 2024. And we'll talk about the penalties in a moment if you get it wrong. Now, I have to say that if you have got a landlord with a massive portfolio, he's probably got a firm of accountants on board already talking to him about this. I think my concern as a lawyer is that most of the landlords we deal with have probably got on average 1.5 properties. And they're the sort of landlords going to read about this legislation probably in the Mail on Sunday in March of 2024 and press the panic button. And I think what we've got to do is make sure that agents know what's coming and know how to respond to those panicky landlords when they do walk in March of 24 and say, oh my goodness, what have I got to do? Now, it does say on the screen, corporation tax. What we're talking about here for April 24 only applies to individual landlords. So if you have a landlord who has got their property portfolio through a limited company, nothing's going to change for them until 2026. In 2026, corporation tax will go digital as well. But for the moment, 24, which is the date on the near horizon, that's going to apply to individual landlords, individuals who don't have a corporation, a corporate structure for their properties.
Yeah, and just to pick you up on that, I think even 2026 is not yet confirmed for corporation tax, but they're saying it won't be any earlier than that.
No, it won't be any earlier than that. I mean, all of these plans were put back a year because of COVID and the lockdown. So it's quite permissible that 2026, when we come to look at it, the government may push back the corporation tax. A lot will depend, I guess, on how the VAT thing is working out. Feedback at the moment from HRMC is that, yes, most registered VAT users are using the software and things seem to be going fairly well. Now, obviously, if between now and April 2024, there's a bit of a hiccup in the whole digital network because they're finding the VAT returns are not being filed on time, we may get things pushed back. But for the moment, April 24 is the date that's already been pushed back from April of 23. Corporation tax, if there are no hiccups along the way with self-assessment for individuals, I think we can more or less say corporation tax, it'll start being digital April 2026.
Yeah, and just for context here, in the private rental sector, the average rents are considerably higher than £10,000. I mean, £10,000 a year is £830 a month, isn't it? And certainly the average we see is more like £1,200. It's close to £1,200 a month, £14,000 a year. Yeah. So it's going to affect most landlords, this, isn't it?
I know. I mean, 10,000 is a pretty low threshold, to be honest. But the government wants to push this, to digital, because what they're saying is if you have compatible software and you can drag stuff across from, your management system into your software that's doing your returns to the revenue, you'll have less chance of error. Things will be done more smoothly, quickly. It'll save you, the agent, time if you've got to provide this information hitherto in paper form to your landlord. And more importantly, to the government, it'll save the revenue a considerable amount of time and effort. There'll be fewer errors, fewer chasing ups, and it should, to be honest, accelerate the tax take. But that's the thinking behind it. And you're just going to make sure the software you've got is compatible to everything you're using at the moment and will be compatible when you come to file your returns.
Yeah, and I was doing some reading around this. The HMRC is claiming that they see £8 billion a year of sort of loss from what they see as loss to the exchequer from errors, basically. So I think that's a big part of what they're trying to do here, isn't it? Just sort of tighten up on it. What they're arguing is not fraud or evasion; it's just mistakes.
I mean, I've seen those articles. I'm not quite sure where they come from that figure. But the idea is by streamlining the whole process of putting your tax return in and linking it to your accounting system, which has your income and your expenditure, everything linked together, there'll be fewer errors. Tax take will increase. And more importantly, the time that some revenue officers spend going through tax returns, checking the numbers and all the rest of it will be considerably reduced. So if you like, this is trying to make the government tax collecting arm more efficient than perhaps it is at the moment. It's going to help landlords and it's going to be a bit of a challenge for agents, I know, but this is where you come to looking at the opportunities which can be presented.
Yeah. So let's jump on to what happens when you don't comply with this. Let's have a look at the penalties.
Yeah, they're revamping the whole penalty structure. At the moment, if you don't file something on time, you get a stroppy notice, you get a fine, you might get interest payments. All that's going. 1st of January, we get a new point-based system. It's a bit like, when you and I speed at 70 miles an hour when we shouldn't, William, we get points in our license. Very, very similar system for the 1st of January for taxpayers who don't play ball. So the idea is every time you do anything late, you get 1 penalty point. Okay, that goes into your basket. And when you get to a certain number of points, it's an automatic £200 penalty. Now, I'm going to say this, William, and if you and I are banned for driving, for speeding or whatever, the moment we're banned, that ban takes effect and all those points disappear. It's not going to be like that so far as the revenue is concerned. So the way it's going to work is something like this. If you file something late, you get 1 point. Now, if you are only obliged under the regulations to make 1 filing a year, an annual filing, you can have 2 late annual filings and you get 2 points, okay? And for you, because you're filing your stuff annually, whatever it is, 2 points is what we call your penalty threshold. Now, contrast that to, say, a quarterly filing. So if you are a landlord after 2024 and you've got 10K income or more, you have to file every single quarter and your statement at the end and your tax return. So if you're on a quarterly filing basis and you miss a single filing, you'll get 1 point. But you're allowed to have 4 late filings and you get 4 points in total before you meet what's called the penalty threshold. Now, as the slide indicates, slightly different for monthly filings, you need 5 points. But once you get the threshold, which is applicable to you and your personal situation. So if it's a landlord, it'll be the quarterly filing, the 4-point threshold. Once you get to that threshold, yes, you get a £200 penalty. So let's look at a situation where a landlord, for whatever reason, has missed or filed late on 4 occasions. They put them in, but they're a day late. He's now got 4 points. He gets an automatic £200 penalty. But those points will stay on your license, as it were. So if you then file a 5th return late, guess what? You get another £200 penalty. A 6th one goes in a day late, you get another £200 penalty. So it is all adding up. And the idea is they want you to make absolutely sure your filings are done on time. So if I was a small landlord, what I'd probably want to do is give the responsibility for all that filing to somebody else, my accountant, my bookkeeper, whoever it may be. But those points will stay on your license until either you get to a 2-year point and any penalty points you earned in the last 2 years disappears. I mean, let's go back to driving. You and I get 3 points for speeding. Those 3 points stay on my license for 3 years, then they disappear. With penalty points for the revenue, they'll stay on your license, as it were, for 2 years, or unless you clear your account with revenue. And by that, I mean sorting out anything which is outstanding, filings which weren't made, and you keep your nose clean for another 2 years. If you do all of that, all your points will disappear. But at the moment, the way they're talking is if you're a landlord, you miss or you late file on 4 occasions, £200 fine straight away, miss the fifth, another £200, and so on and so forth. So it's a dramatic way of trying to emphasize to taxpayers, it's not a question of getting this return in on time. It's getting every return in on time. These dates are going to be large in every landlord's diary come April of 2024.
Yeah, super. It's really helpful. And just as a reminder for everybody who's joined us on the call, this is a TPD eligible webinar, so everybody on it will be able to get credit towards the TPD. We'll be sending certificates out in about a month's time. So, but it's just very, very helpful for people to be appraised here of exactly how this system's going to work. Thank you, Robert. Let's turn to now what this is going to mean for agents and landlords. So I think we'll start with agents. Because any agent who's dealing with a landlord who has property income of more than £10,000 should be aware of this. Of course, agents are business owners too. Although, as we've talked about, their own corporation tax doesn't get brought into this net for another few years. And this is all about that now ensuring landlords and their agents have got an accurate reflection of tax figures, which just reinforces, really, I think, the importance of bringing digital technology into the process. And obviously at Goodlord, we've been all about that for 8 or going on 9 years now, but this is sort of starting to creep into the sort of end users of the product of the landlords, and it's turning this process into a much more frequent event. Especially some landlords probably only think about the property once a year, and now that's not going to be possible anymore, is it? So as an agent, that's the impact we're facing here. Robert, what do you think is going to be the main struggle for a typical agency here?
I think there are two issues for my mind. I mean, number one, we've got to make sure that when it comes to inputting data into a particular landlord's account, whether it's, that EPC certificate you have to pay for or the gas safety checks, when you get data, it's got to be input into your system, sooner rather than later. You can't leave it in a pile of miscellaneous papers and do it when you feel like it, because if you don't file an accurate return, in your particular quarter as a landlord, you're going to have a problem. So number one, you're going to make sure your accounting systems are up together, that everything is streamlined. So that is the big issue. The second issue then is what support are we as an industry going to give to those smaller landlords? Like, I'm not worried about landlords with big portfolios. They'll have their accountants who will advise on this. I'm worried about your average landlord with perhaps 1.5 properties, and this is going to be a complete nightmare for them. And to my mind, I mean, I don't know whether you agree with him, but I think this could be an incredible opportunity. Not that I'm saying agents, you guys need to go and start filing returns on behalf of individual landlords. I mean, that whether your firm does that is a completely different issue. But of course, it's an incredible opportunity to build relationships with, the accountant down the road. Because I think most small landlords will definitely need to get some accountancy input. And if you can set up some sort of cross-referral system with your local accountants, I think it could be incredibly beneficial for the average agent out there in the high streets.
I agree. I very completely agree. Although I also think there will be some situations where agents, where a landlord's faced with a choice. And again, that sort of small landlord with, as you put it, an average of 1.5 properties, whereby obviously what we mean there is, half the landlords have got 1 property, the other half have got 2 properties, roughly speaking. But if you're one of those landlords, you've got a choice, really, potentially. If you've not been using an agent already, maybe you've not been doing an accounting, you've been doing it yourself, you're pretty much going to be forced into having to find some professional help here. And you've got a choice between, is that an agent or is that an accountant? And I think enterprising agents could set themselves up to be effectively a sort of light touch accounting partner for their landlords here and be able to support the quarterly process and the filing process here. So, but other landlords will think maybe this is the time to bite the bullet and get an accountant and start managing their tax affairs a bit differently. But it's, as you say, I think either way, the accountant understanding where accountants fit into the process will be key for any agent here. And just a question from Andrew Bennett. Sorry, quickly, Robert. He's just asking to confirm: is that £10,000 per year figure? Is that gross or net?
That's gross. Because what you do is you put in your return, it'll show your gross income, and in theory, you've got to show your expenses for the quarter. So it will be gross. But I mean, going back to the point you made, I mean, if I am, your average small landlord, they're not necessarily going to have the computer power or the technology or the software to actually keep their own records and then do their return and interface with the HMCR. software. I think agents watching this video have an incredibly good head start because they've got the Goodlord package already. So there's already an accounting system there for maintaining accurate records of expenditure, income, and all the rest of it. And as far as I know, and you can correct me if I'm wrong here, William, I mean, you work with all the big software houses, so that when it comes to, interfacing between what agents have already got from Goodlord and what they need to have to talk to the revenue, it's going to be seamless.
Yeah, we certainly work with the ones we can, and we provide ways to export data that, for those that don't have a direct link, that you can get the data out of the system and use it wherever with whichever package you want to. So, and we were looking at Goodlord actually at making that more seamless as 2024 approaches. We're still working out the best ways to do that and trying to talk to our customers as to what they want, what they're expecting here, what they would find helpful. But maybe we should turn to the landlord side of things next. So. Many of the people on the call probably are landlords, and as we've highlighted here, the any landlord with property income of over £10,000 a year is going to get brought into this net, bringing them into a quarterly process. They'll be wondering what impact that has on their cash flows. We'll talk about that in just a second. They're going to need, if them or one of their advisors or agents is going to need compatible software. I suppose there's some suggestion in some of the commentary around this. This is going to reduce evasion. But ultimately, it's going to bring more taxpayers into the self-assessment process, which for those of us who are in it already is one of those. It's one of those things you wouldn't necessarily wish on your worst enemy, isn't it, Robert? But let's just talk about that. Can we actually pick up on the cash flow point here? So, are we right in thinking that at this point it's not changing the dates that you actually the tax payments are then due?
No, I mean it's not. But I mean, there's got to be a big caveat here. Some of you may remember that a few years ago, if you sold a residential property as a landlord and you had a capital gains tax liability, you simply put the figures into your annual return and you paid your tax 12 months after you sold the property. So in that respect, it was great, business as usual. Then a couple of years ago, they changed the rules. Now, if you sell a property and there's a capital gains tax liability, you can't simply fill in your annual return in 18 months' time and send a check off the revenue. You've got a very limited period of time to actually file a return and, worse than that, pay the anticipated capital gains tax with that return. So in other words, you're paying your capital gains tax probably within, a couple of weeks or a couple of months maybe of actually getting that gain and selling your property. So from the government's point of view, that has really accelerated the take on capital gains tax payments when you sell a property. Now, at the moment, William, absolutely right. All the stuff out there which you read says that nothing's going to change when it comes to landlords actually paying their tax. You put your quarterly returns in, you do your final return, and then you get your tax bill. So nothing is going to change. But, I mean, call me a cynic, but if they can change the rules with capital gains tax to accelerate payments for the government, it doesn't take a genius to work out that at some stage they might look at changing the rules for income tax. Now,
and they did it with corporation tax,
reasons,
didn't they? As well, they
exactly.
took the advantage to speed up the receipt of corporation taxes.
Absolutely. Now, when you think about it, if you, after 2024, are putting in your quarterly returns as a landlord, that quarterly return wants your gross income. It also wants your expenditure. If they weren't thinking of accelerating the tax take, why bother with expenditure? Why just have a figure what your gross income is? But of course, once they have the gross income and the expenditure, it's it's obvious that you can work out what your rough tax liability is going to be. So the bad news, and I don't say this to too many landlords out there, I suspect that in 3 or 4 years' time, once the system is bedded in and landlords are used to filing a quarterly return, you may, like you and I do, William, when we send off our VAT return, we may have to make a payment on account to the revenue, which will be adjusted, obviously, at the end of the year when you put your final return in. But that is speculation, and that is the future. But if I was Rishi Sunak and I had empty coffers to fill, it would be one thing I'd be looking at to accelerate the cash take.
Yeah, I agree with you. Another quick question around this £10,000 thing. Kenneth asking, what happens if a property is jointly owned with the other half, for example? Do you each get a £10,000? And as I say, you jointly own a property with £15,000 a year rent. Does that count as 7.5 each, or are you liable?
To be honest, I don't know. I think at the moment, because it's joint and several liability for landlords, I think we assume we put in one joint tax return. Now, I've got to say, many of the detailed regulations surrounding this are not yet out there. And I think between now and March of 24, not 23, March 24, we'll see a plethora of stuff coming out. You know, it could be another reason to build a decent relationship with a local accountant, because they'll be on top of all of this. But I've got to say, I don't know the answer to that question, William, for which I can only apologise to everyone who's watching this webinar.
I don't either. It's a good question. Yes, let's actually, sorry, there's another question here, which is that quarterly process. Let's say, for the sake of argument, that you haven't that you fail to track some expenses in the quarter in question, and you only realise in the end of year statement. Is it too late? How late can you go back here with if you've already submitted a quarterly filing?
No, I think that's absolutely fine, because the whole idea, the quarterly process, to give you an indication to you as the taxpayer what your tax bill may be, and to the revenue to know what's coming. So if you don't get all your expenses into one particular return, put them on the next one, and draw them in at the end of the year when you put your final your bond balancing statement in. So at the moment, that's not going to be a problem. Clearly, if there are large sums which we're talking about as expenditure, yeah, if I was a tax inspector, I might want to know why it wasn't included in the first return, known in the third return. But it's not going to be a problem. But it does, I'm afraid, it does put an emphasis on agents, because you are the guys who are going to be recording that expenditure, and you're going to make sure it gets on the record fairly quickly. We also got to make sure that landlords should tell us if they've got expenditure which they're incurring directly and doesn't come through their agent. Landlords are getting into the habit of letting you guys know everything. So when you do actually upload the information, either to the landlord so they can do their own return, or perhaps you're going to do the return on their behalf, it is 101% accurate.
Yeah, super. So talking about 101% accurate, let's turn to looking at the software implications here. So maybe jump on a slide, the sort of the kind of magical phrase here that you see on a lot of the HMRC website is functional compatible software. And as we just had on the Q&A, somebody's just posted that this functional compatible software seems to be something of a slightly mythical beast when you hit the internet. He's putting, but of course we all hold a lot of information digitally, that actually I think we'll jump on another slide here, because I think the reality is it's true at the moment. There are very few providers who seem to be letting agencies specific. So just on the next slide, we've got a link to the website on the HMRC, which lists the software. So, Sarah, if we could jump on, please, to the next slide. Just post that link here. Thank you. So there's a link on the website. You can Google this, and it lists about 30 or 40 different pieces of software that are compatible so far. But I think the thing to say is that list is by no means complete, and the industry is waking up to this. The software industry is sort of exploring this, and I know that several firms we're aware of are busy deploying software at the moment, and then they have to go and get a confirmation from the HMRC that they're compatible, which is a requirement of the software here, obviously. So you should expect that list to change and develop. But crucially, and we made this point earlier, didn't we, Robert, that if you're already a VAT registered agent, which most agents are, then you've had to be doing this since the beginning of this month, and you'll have a lot in place already through that software. It's maybe somewhat invisible to you on the front line, but somewhere in your finance team or your accounts team or the accountants who maybe help you with it, they will have some form of compatible software for this.
Yeah, absolutely. Now, I mean, the Revenue haven't published the final regulations for 2024. I mean, they'll be coming out within the next 12 months or so. So if you have got some sort of software package already in your accounting department dealing with the VAT digital stuff, I can virtually guarantee that whoever provided that software will be giving you an add-on as we get closer to 2024 to deal with a landlord-specific problem. So, as you say, William, best place, go and talk to your accountancy team. What have they got already? How can it be adapted to deal with the landlords and the situation we'll have in 18 months' time?
Yeah, but certainly the accounting packages like Sage, Xero, QuickBooks are well onto this sort of stuff, and are being used by thousands of professionals all over the country already. So those ones are the sort of well-known ones, but you will expect to see specific ones showing up, I think, for the agency community, and there is still 18 months to go. So for a lot of people, they haven't yet got that link live, or they haven't yet got the HMRC compatibility confirmed. But it is happening.
And I think the great thing to stress here, William, is if you've got one of these systems already for dealing with VAT, those systems are obviously compatible with what Goodlord has provided in the past for storing data. So getting information transferred from one package to another package and off to the revenue won't be an issue. It'll be there. It'll be sort of, a seamless transition for you guys. So, goodbye paper, hello, click of a button. It should be relatively easy once it's all properly installed.
It's all getting easier, and one of the things at the Goodlord end of things is we've been working to roll out our rent collection and lettings account features, which any agent using that, they've got features to track the expenses. They're getting all the rent tracked digitally. All the records are already there, and it's as you say, Robert, it's all designed to be integrated into the accounting process, which the agent's using or the landlord's using, and support that error-free process, but it will depend on how the agent does their accounting, how they want to upload it to the HMRC.
Yeah.
Good. I think, unless there are any other questions, I think that pretty much takes us to the end of this. Have we got any final points or observations you want to bring in, Robert?
Yeah, I'm going to mention the exception.
I'll just invite anybody else who's got any further final questions to use the Q&A button at the bottom of the screen. We've got a few more minutes if there are any additional questions. But yeah, Robert, final thoughts?
Yeah, I got a final thought. There are always going to be exceptions to every piece of legislation. And the government has made it clear that if you have an individual, a taxpayer, who can't cope with digital tax returns, they could be exempt. So, again, go back to perhaps my little old lady landlord with 1.5 properties. If somebody literally cannot use a computer, if they can't connect to the internet because, there is still somewhere in the country that can't connect to the internet, or if you've got someone who's going through some sort of insolvency process, like they're being made bankrupt, or in due course if it's a company being wound up, those limited exceptions, those taxpayers will be able to say, fine, we're not going to do any of this. We will still put in our annual return at the end of the year. We won't have to do the quarterly thing. So, of course, if you do have that, average little old lady landlord who can't operate a computer, she has got to make an application to the landlord to the Inland Revenue to be classified as an exception. If the revenue say, fine, Mrs. Smith or whatever, you don't need to do any of this, well, then that makes the agent's life a bit easier, because the liability to do a tax return in this way when we go digital isn't on the agent, it's on the actual taxpayer. So say if you have a taxpayer who says, well, I'm exempt, yeah, you can probably forget this a little bit longer. But say at the moment, the way they're talking about 2024, you will automatically be in unless you as the taxpayer make a specific application to come out. And
you need to get the HMRC to confirm that, don't you? You need to get a confirmation from that.
If the taxpayer says, I'm exempt from any of this, you want a bit of paper, you want something from the revenue saying, yes, we all agree. Now, the only other thing I was going to say is that when any piece of legislation introduced in this country, there has to be what's called an impact statement. And when the impact statement for this was done, they reckoned that the cost of the British taxpayer of implementing all of this will be a one-off charge of about 1.3 billion across the country. And that's literally the cost of the software, the training, et cetera, et cetera. They reckon the ongoing costs for British industry are going to be marginal. The ongoing cost will be about 150 million a year on top of what we pay already. Not a great deal when you think of the size of the economy, but that's because the system is designed to save anyone filing a return, save them time. Now, somebody in the revenue did a calculation and reckoned that with the number of taxpayers we have in the UK, that 1.3 billion price tag works out, would you believe, at £330 per taxpayer. And that's simply taking the number of entities that pay tax, dividing it into 1.3 billion. I have to say, though, that if you're a fairly large agency, I suspect that your software bill from the likes of Sage will be considerably more than the average 330. But those are the sort of figures which the taxpayers are going to have to absorb going forward just to make sure this all works. Most of the savings, I'm afraid, will be with the revenue. We'll pick up the bill. It was ever thus.
It was ever thus, yeah. What about money laundering? is there any implication here around money laundering, and is that part of the process?
Not really. The revenue won't be spending a great deal of time going through the returns for money laundering processes. But clearly, if there is some sort of flag that's been raised on a particular taxpayer and a return comes in, they will probably give it more attention than they might, the return from Mrs. Smith or Mrs. Jones, your average landlord. What they will do in flagged cases is actually look at the veracity of those returns. If we get a return which says that rent coming in for a particular property is considerably more than, the high street value would suggest, then there will be something. But the revenue don't really have the resources to review all of rental incomes, all of the returns, and say, look, there's something wrong here. Flag cases, they'll get attention, but otherwise, I'm not too concerned about money laundering implications.
Right, fair enough. Question from Dutton. Will the HMRC be providing a helpline for inquiries here?
They already have a helpline. I don't want to be too negative about this, but sometimes getting through to the revenue is, shall we say, a challenge. I think what you need to do is talk to your software providers, because obviously the people providing the software have already had that conversation with the revenue. If you're not going to try and do your returns on behalf of individual landlords, but you're going to outsource that to your local accountant down the road, get that relationship with the accountant going early. And the other thing is, read your Goodlord updates, because if stuff comes through, Goodlord and the other big, sort of entities out there like Property Mark, National Residential Landlords Association, they will be referring to this more and more as we get closer to the April 2024 deadline.
Yeah, super. We've got Kareem asking, I don't know that we're going to help him here, but he's asking what software is recommended for a portfolio landlord, if any, that would be compliant for 2024, 2026. Any names?
Basically, all the big software providers, the Sage, the QuickBooks, all that lot, they will all be compatible, because if they're not compatible, they'll be dead in the water. They will be compatible. The question is not what's good for your landlord, it's what's good for your business. Now, as William said earlier, if you are VAT registered for your business, you will already have half the software there in your accounting department. You may not know it, but it will be there. So when it comes to 2024, what you want is not to throw out one provider and get a complete new software package in. You want to go back to people who provided the digital stuff for VAT returns and just get the bolt-ons, as it were. Obviously, if you're a large portfolio landlord and you're going to be filing your own returns, well, then I think I would go to my accountant and find out what my accountant uses and probably try and mirror what they've got in place already.
Yeah, and that actually takes us to a question from Maria, who says she's got one rental flat, doesn't use an accountant, so can she buy something like QuickBooks herself and do it all herself?
Absolutely, she can. Absolutely. But as an agent, just bear in mind you might be missing an opportunity here to do it on their behalf. But no, in that case, what I would do is I'd look at the brand names like QuickBooks, like Sage, because you won't want a massive software program to go on your laptop. You want something fairly basic. And I think as we get closer to 2024, the market will be flooded with them. But of course, they'll all have to be compatible to the revenue systems. Otherwise, they'll be dead in the water.
Yeah, super.
Well, the only thing I would say, though, is if you're talking to a landlord about getting their own products on their laptops, ideally, of course, it should be compatible with what you're going to have in your office. Because remember, the filing of the quarterly returns is not just gross income, which they can work out themselves from a rent statement. It's going to be expenditure. And most of the expenditure with a fully managed property won't be in your landlord's accounting system, it'll be in yours. So you want to make sure that if you're having that conversation with the landlord, you let them know what you've got or what you're getting, and just make sure the two systems talk to each other. Otherwise, what you'll be doing, the accounts team, is printing off reams of paper, sending it to your landlord, who will then have spent hours putting it back into a digital format on their laptop.
Absolutely, thank you. We've got several other questions that have just jumped in, actually. Darren's just slightly puzzled that, what exactly is the point of all this if they're not going to receive the tax quarterly? But I suppose that, to some extent, that's why we're cynical, isn't it, Robert?
I totally agree, which is why, being a total cynic here, I think we're going to get to a situation where, a couple of years down the line, when all the problems have been ironed out, the gremlins have been sorted, someone's going to say, right, when you put in your quarterly return, just like you do for VAT, we'd like a payment on account, thanks. But at the moment, the way they're selling it is that it's less time, it's less resources within the revenue to process this stuff if it's digital than if we send it in any other way. But I agree. I think the writing's on the wall at some stage, so there could be severe cash flow implications in 5 or 6 years' time. But I'm speculating.
Yeah, super. And as I say, the agency is claiming there's £8 billion they're losing, not just from residential landlords, to be fair, but that's the general push for making it all digital. That the digital doesn't make mistakes. Question from Karen, Robert. What if a tenant pays 12 months rent in advance, but the landlord wants it paid monthly to them? So that presumably they only have to file quarterly, the 3 months at a time.
Yeah, well, we sort of have that problem at the moment, because if you pay 12 months rent up front, it's quite possible that the revenue will say, right, your entire income arises today. 16th of November, your entire revenue comes today, which means you're taxed on all of that in the current tax year. Now, that means when we go into a new tax year in April of 23, you've got a very small income to set off against expenses incurred in the next tax year. And that's always been a problem. Now, at the moment, the revenue don't really worry too much about that. If you say, I'm drip feeding the rent to my landlord, well, the revenue say, fine, we'll apportion that rental income for the tax year in which your landlord actually gets it. But I think it's a very good question. And I think going forward, in a scenario where rental payments are being made up front, 12 months rent, I think you need absolutely clear that, number one, it's not a deposit. And number two, that money will only be paid to a landlord on the particular month when a monthly payment will otherwise fall due. If we don't do that, we've got problems with potential deposit regulations, and we've got the potential of the revenue saying on that first return, oh my goodness, they've had 12 months rent in this month. That's all going to be taxed in this tax year and not allocated in part of the next tax year. So that is a very, very good question. While we're on this, if anybody's read the white paper that my favourite minister, Michael Gove, produced last June, one of the things he's talking about in that white paper is limiting our ability as an industry to ask tenants for large upfront rental payments. Watch this space. There's going to be an awful lot of change coming if Michael Gove gets his way, and how that will dovetail into the revenue, I don't know. But large upfront payments will or may be a thing of the past if Michael Gove has his way.
Very good point, Robert. Thank you. Point from Zana. If you have points regarding the lateness of filing, so penalty points talking about here for lateness of filing, and if you have an accountant acting on your behalf, is that grounds for an appeal or no excuse?
No, I mean, I don't think there's going to be anything you can appeal against. If it goes in late, it goes in late. You get a point, and points make prizes. I think, though, that if you do eventually get a penalty, and you can point the finger at your accountant and say, look, the only reason I got a penalty is because you guys were late. I would say you ask your accountant to indemnify you for that penalty. I can't see any reason why they shouldn't do that. Obviously, if they come back and say, well, the reason we filed late is because you didn't give us some key information, well, that's a different kettle of fish. But I'm afraid, the fact that you were let down by a third party, whether it's an accountant or, I'm afraid to say, a letting agent, is not going to cause these slippage of revenue. They'll simply give you a point, and when you get to your threshold, whatever that might be for you, there will be that penalty.
Yeah, super. Right, I think that's about it, Robert. Thank you very much for all of your expertise. Thank you for helping us navigate these uncharted waters. I think key takeaways here are that big changes coming in 2024, 1st of April. For agents who are VAT registered, they've probably got the software somewhere in their process already. But for the landlords, any landlords with over £10,000 a year of gross rental income is going to be brought into this net, and it's going to need to start to support a quarterly process, either with an agent or with an accountant or doing it themselves. And that's going to be quite a big shift. Outstanding question of does splitting ownership of a property multiple ways sort of duck you under for £10,000, which we don't have an answer for. Sorry about that. We will see if we can find an answer for that and circulate it with the notes. But in the meantime, keep an eye out for further software options coming into the market. The HMRC website has a link to the currently approved piece of software. We're expecting that list to grow considerably over time, and we'll be issuing quite a lot of material as we see it on the Goodlord Newsagent blog site, and recordings and notes from this webinar, and CPD certificates coming out for people as well within about a month's time. If you haven't done it within a month, do chase for us and chase us for them. But Robert, thank you very much for your time, and
thank you.
Looking forward to seeing how this unfolds in practice.